Well, it's 9 o'clock. It's 9 o'clock on a Saturday. The regular crowd shuffles in. All right. 9 p.m. Tuesday, February 14th. Hey, it's Valentine's Day. Hope you got your Valentine something happy and special. I don't know. Maybe you did. Maybe you didn't. Maybe you don't see the purpose of Valentine's Day. But you want to know something really neat? For the past 12 or 14 years, Hershey stock has moved up the first 2 weeks of February. Every year, the stock moves up. Why is that? That, my friend, is called seasonality. Certain time of season, certain events occur. And it just so happens that today being the 14th, the second week, actually we're in the third week of February now, but within the first 2 weeks of February, the stock for Hershey moves up, and they get chocolates. I don't know. Maybe Valentine's has something to do with it. Don't know. Could be Easter's right around the corner also. But every year, you buy Hershey stock at the beginning of the month, and you sell it right around the middle of the month. You should be good. But that's not what we're here for. But Hershey does have options. So, and I don't know if they have weekly options or not. That is an interesting question. You know what I did do lately? I inserted software, the dividend calendar software, on my computer here. So let's clear this, let's reset it, and put in Hershey. Hershey is HSY. We're going to hit add, and then we're going to hit go. Now, this software needs to be updated. Number one, the spelling is wrong. I had my programmer in a different country program this for me. I came up with the idea, put it all together, and he spelled the word wrong. But that's not what I need to have done. See what's happening here? The dividend is coming up 0. And the yield is coming up not available. And the EX dividend date is not coming up at all. That's because Yahoo Finance, where we get all our data from, changed its storage parameters. So when they decide to change the dividend, they just like move a comma or put a period or parentheses or add another 0 or any change they do whatsoever, it throws off the software. So the software is not working properly. It still isolates when Hershey is actually paying its dividend. It just so happens to be in February, May, August, and November. Right here, the fourth week. The fourth week of February, Hershey actually pays its dividend, which is a good thing. Excuse me for 1 second. My son gave me a little cold, and I've had it since the beginning of January. Doesn't seem to want to go away. A little bit more on the software. The software, you just put the cursor up on this big long tab here. It's relatively simple. It says, enter your stock symbol, cut and paste, whatever. But you put as many as you want. You hit add, and then down the bottom here, you hit go, and then it searches through all the data, and it finds out exactly when they're paying their dividend. Now, it changes every year. It's here you see it's the fourth week of February. Now, the fourth week of February this year just so happens to be the 22nd. Next year it may be the 21st, or the year after that might be the 24th. But it gives you a rough idea of when it is. So the fourth week of February, if you want to find out the exact date, go on over to Yahoo Finance and find out exactly what date it is. But this software right here can be downloaded right from my website, the 10-Minute Trader. I am having the programmer going in and fixing that little glitch. So I have to hire him every couple of years for whenever they do that. Whenever Yahoo changes its data storage. Okay, so let's get back to what we're doing today. Today we're looking at, holy cow, can that be right? 8,900? All right, I can deal with it. 8,900 is not bad. So every time Yahoo changes any of its parameters on its data storage, it can be almost anything, it throws off the software. So we have to keep in constant contact with the programmers to go in through the back door and change all those things, because we have no control how they do that. Look at that. It just so happened to have 400 shares of Hershey right there. See that? 400 Hershey, and I got that on the 7th, the first week of February. Imagine that. Okay, my target is 110, and right now it's at 108. So this is the dividend capturing, the dividend on steroids. This is where we go in 10 days prior to the EX date. We try to capture the run-up going up to the EX dividend. Now, as I said earlier, the dividend's in the 4th week of February. Right now we're in the 3rd week. So next week we'll be looking to get out of Hershey. Whether it hits our 110 target or not, we're going to be exiting. Right now it's at 108. And well, let's bring it up just for the fun of it and see what she's doing. HSY, and all right, this is what it's done for the year. Hershey opened up last year 89.51. This is some craziness here. She goes sideways for a couple of months, shoots up to 97, and then this happened right here. She had a huge update. Look at the volume spike. Now, do I want to know what this is about? No, not really. Do I care? No, not really. The only thing I'm interested in is it going to hit my target price in the next week, as it done it in the past? We're going to go into the other software also and show you how that worked. But just clarify to see what actually happened. So Hershey went from 97, 629, which is June 29th, from 97.31, and she hit a high of 117. Now, how would you like to have that movement? I wasn't in it then, so why does it make any important? Why is it important to me? Why do I care? I don't really care. I don't care what it did before. I care what it's going to do now. So let's advance to where we are now. All right, here's where we are now. January 18th, she's at 105, going sideways for a couple of weeks. Check that out. And then February 3rd, she hits this nice little uptick, and she's going an upward trend right now. Now, I got in on the 7th, so let's take a quick look at Hershey's, find out what we got that at. Come down here, view the trades, and 400 shares at 107.99. Okay, see that right there? 400 shares, 107.99. And she's at 108.34, so she's up. I could get out now and take the profit and be happy about it, or I could just leave it alone and let it do its thing. Okay, right now if I sold it today or tomorrow morning, I'd be up 140 bucks. Do I want that? No, not really. I'm just gonna let it ride. Wow, WEC, we should actually thinking on getting out of that one. Because we, as you can see, I don't like to be in for more than 10 days. And we were in the 26th. Wow, that is past 10 days. Yeah, we would have gotten in on WEC on the 26th. Wow. 26th to the 2nd. The 9th. So I'm in 1, 2, 3 extra days on WEC. Okay, WEC. All right, so let's take a quick look at WEC. She starts out the year at 55.47, a nice climb. About 4 months, 5 months in, hits 65.84, goes sideways for a little bit, drops back down in August, goes sideways at 60 for a little while, back up to 60, almost 63 into September, drops back down, and then she was going sideways for the rest of the time. So we got in January 26th. Okay, so what has she been doing since the 26th? Nothing but sideways. Now, this one, we're not looking to capture the dividend, which, as you can see, the dividend was right here. Okay? because you can tell you 10 days, see, 10 days, and the next day is the dividend. And usually always drops on the next day. So am I going to hold it for a little bit? Because apparently I'm collecting the dividend on it. And I have to find out where they put it. And now it's time to get rid of it. So I look at what I paid for it. WEC. Where is WEC? Okay, now we bought WEC at $58.50. So what I'm going to do is I'm going to go in here and I'm going to cancel and replace $58.50, 58.51. As I want to cover 40. Wait a minute, what's 40? 900. Sorry, I have 900 shares. So 900 pennies is $9. Is that enough? Yeah, that's enough to cover my commissions. Is that right? 5 in, 5 out. That's 10. No, let's do 2 cents. All right, that's going to cover my commissions. So this way, I'm just collecting the dividend on this one and then getting back out. So my new target is going to be 58.52. And there we have it, 58.52. Now, I would have preferred the 2.5% increase, but it doesn't look like I'm going to get that. We're also going to have to do DFS. DFS. We got 700 shares at $69.93 from the 24th, which means we already collected the dividend on this one also. So DFS, we want to go in and we want to change that one because apparently we didn't hit the target. And I forgot what it was. So let's go back to that. Okay. 69.93. All right, so 69.95. We'll do that one. DFS. And we're going to change that to 69.95. Okay. All right, it's cost me $9 to get out of this one. 700 shares. 700 times 1, that's $14. Okay. And send. Okay, so let's go back here. All right, so the oldest trade I got now was Hershey, which is on the 7th, which, like I said, the EX date is sometime next week, so we don't not worry about that one. VLO, I just bought that one yesterday. So we're not really worried about that. So we're all up to date on here. The 7th on Hershey, that's good. Now these two here, like I said, we collected 900, what is that? Okay, let's check and see what the dividend was for WEC. And we do that by going here. Yahoo. And we're going to go to finance. Fine, this is going to give us an idea of what we are looking at to be catching for our dividend for WEC and UFS, whatever that one is. I forget who that is. That's strange, you know. I got these WEC. Here we go. WEC. Okay. Come on. Okay. Interactive, historical data. We want to look at the historical data. Okay. It used to be, see, they change it. I hate when they change stuff. Because you get so used to looking at something, and then they mess it all up on you. Okay, historical data, stock prices, come on. WEC is, I don't even know who they are. Oh, the 10th. That was 3 days ago. They paid 52 cents. So for 52 cents, 900 times is not a bad price if you think about it. That it right there? Yep. 9 times 52, that's like 450 bucks. Woohoo! Gotta love it. And then we sell it, turn around, sell for the exact same amount we paid for it. So we held it for 2 weeks, make 450 bucks or 460 bucks, something like that. And we move on. DFS. What's DFS paying? DFS. And we come over here, we're going to replace this one too. There's 2 of them. DFS. And enter. Okay. And we only have 700 shares of DFS. So how many dividend do we catch for that one? Come on, populate. It's hardwired in. It should go a lot faster. But apparently it's not. Okay. So DFS, we're collecting 30 cents. 30, that's 210 bucks. Not a lot to brag about there, but hey, it is what it is. Okay, let's go back to here. That basically takes care of everything here, because as you can see, 24, 21, 33, and 25, that's just about my whole $100,000. So I'm not really doing anything else new here. So let's jump in and see who did what today. So we'll go to the Market Watch, and today is the 14th. 26 companies today paying dividends. Some of them you may have heard of. You've heard of Microsoft, I'm sure of that one. Other than that, I really don't know some of these people. All right, let's take a look at BG. Bunge Limited. Never heard of them. Oh, let's not do that. I just want this. All right. Zion Bancorp. Xylem. Never heard of them. Westside Technology. Western New England Bancorp. Does that say Tufi? I don't know. How do you pronounce that? Tufi? Tahoe Resources. Resource Connection. Oh, missed the last one. What is this one? Psychomedics. Okay. Paying 15 cents. Microsoft is paying 39 cents. Marathon Petroleum. Never even heard of them. Mattel. Everybody's heard of Mattel. Gladstone Land Corporation. Ivesco. Harvest Capital. Gladstone Commercial Corporation. Gladstone Capital Corporation. Gladstone Investment Corporation. Wow, Gladstone must be really into that. Okay, Fortis. Duke Realty Trust. Oh, I don't really have to go through all these. Chevron. Ooh, Chevron's paying $1. Let's take a look at them. Just for the fun of it. We all know that Chevron is, I'm pretty sure it's a dividend king. Oh, no, not a dividend king. A dividend aristocrat. I don't know, but it's up there. They have more than 25 years worth of dividends. They increase every year. So let's take a quick look at CVX, which is Chevron. CVX. All right. Now, the dividend date was today, so we'll go back 10 days. Okay. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Right here. Okay. All right, so we're looking for $1.08. Chevron opened up at $11.89. And she hit 112.20. Didn't hit it then. So we're looking at what $1.08 onto $1.89. That's 112.89, 112.97 is the target price we're looking for. Not the first day, not the second day, not the third day, but on the fourth day. Yep, fourth day she hits it. In, out, 4 days. Gotta love it. Didn't have to wait the whole 10 days. Anyway, that's them. And let's take a look at Duke Realty. Why not? 20 cents for Duke Realty. and Duke Realty, DRE. All right, let's go back, because I forgot to do this for them. All right, Duke Realty starts out the year at 19 bucks. So last February, she's at 19. By the time August comes, she's at 28. That's a $9 increase, which is about a 50% increase within a 6-month period. From there, she's going sideways for a little bit, downtrend, bounces back off of the 23, hits 27, and goes sideways, a little drop, and she ends up at 25, where she is now. Now, I forgot which day that was. All right, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Here we go, right here. We're looking for 20 cents for DRE, and that's going to be in and out on the first day. You know, she opens up at 24.09, she hits 24.44. Yeah, she hits the 20 cents. First day, in, out, gotta love it. That's going to be the 31st of January. So let's look at a couple more. BG. BG starts the year off last year right about $52, right around $52, $51.89. Drops a little bit the first month. Then she has a nice shoot up all the way to 67. It's a nice increase for the 3-month period. Then she goes sideways for a little bit, up to 73 at the end of December, at the beginning of December. Sideways and settling down just a tiny bit to where we are today, which is 68.29. Now we're going to look at January 31st, because that's where we're getting in. January 31st, right there. All right, we're looking for 19 cents on the 31st. You're in and out on the very same day. She opens up at 68.05, and she hits a 69.24. In, out, same day. That's almost $1.20 increase in one day. That's nice. FTS. Fortis looking for 30 cents. FTS. Okay, so why is Fortis not giving me the whole reading? And that's strange. 10.14, she's at 31. She hits a high of 33, drops back down in November. 29, nice steady climb all the way up to where we are today. And the 31st, you're in and out on the very first day again. 30 cents for FTS. She opens up at 31.39, and then she hits 32.18. So you're in and out on the same day. Again, love it. Gotta love it. Okay, so the software is going to isolate who's where and what the percentage are of hitting it. Now tomorrow we can't do very much about anything, because you'd had to have bought it today in order to qualify for any of these. So I'm not going to look at those. Let's look 10 days from now. Now today being the 14th, 10 days from now is the 28th. Okay, so we're looking at the 28th. And who is there on the 28th? We got 10 companies on the 28th. Whoops. Okay, you have to excuse me again for a minute. Oh. I love my children, love my children, love my children. Anytime they bring home something, always catch it. Okay, 10 companies. Let's take a quick look at who's what. Watts Water Technologies, Teva Pharmaceuticals, New Star Financial, Maxim Integrated Products, The Mosaic Company, Jack Henry and Associates, Goldman Sachs, Floor Company, First Financial Bank Corp, and Eversource Energy. Okay, so the first thing I would do with these, I can't cut and paste because they don't allow me to cut and paste no matter how hard you try. It's gone on over. Ooh, I don't have access to that anymore. Go on over to 10-minute trader. As you can see, you can't access it anymore unless you're a member. So you're going to join today, get your monthly membership, sign up, blah, 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 and subscribe. And then you can jump in and get to your own, get to the access to the software, which I can't show to you anymore because I don't have access to it, or I'm not going to show you how, because that will give you the codes and no thanks. All right, let's get out of here and get back to where we were. Let's take a look at a couple of them. ES. All right, ES is on the list to take a look at. They're paying a 47-cent dividend. They started last year out at 53.75. All right, within 2 months, she hits a 58, which is not bad. It's a $5 move. It's a 10% move within 2 months. Goes sideways for a while until she hits a peak. The high for the year is 60.39 back in June 30th. Then from there, slowly sinking the whole year all the way up to 11.30. She dropped down to 50.83. So she makes a 10% move from the beginning of the year last year. It's 10% by the time July comes, and then from the 60 she drops down to 50 to the end of the year, December 2nd. So from December 2nd to where she is now, 55, which is another 10% increase, which is where we are today. So the question I have for you is, does this look like a company you want to jump into and explore whether or not you want to invest in this one? So, we have any questions over here at the Peanut Gallery? No questions from the Peanut Gallery so far. All right, gotta love it. No questions. All right, so we have 10 companies to take into consideration for tomorrow. We have ES, who's next? FFBC, First Financial Bank Corp. FFBC. Now that's a nice little move. Let me show you this one for a little bit. All right, FFBC. She starts out the year at 16.51 back in February 16th last year. A slow and steady increase right up to the election. Now this you're going to find out very interesting. You're going to find a lot of stocks are directly related, or the movement is directly related to the election. So everybody's waiting to see. This thing's going sideways for months. And then it comes to November 8th. Donald Trump is elected into the office, and what does she do? The day before the election, she's at 21. Okay? By the end of the month, she's at 28. So she goes from 21.50 to 28.98 in 3 weeks. Okay? How much of a move is that? From 21 to 28.29. That's an $8 move, which is about a 30% move within a month. Now, don't get me wrong, 30% in 1 month is great, but could it sustain that? Apparently so, because she hits a high of 29.80, settles back into a trading range around 28.40, and goes sideways for quite a while. Can she hit that 17-cent dividend? Sure she can. It's only 17 cents, and this thing has a nice movement. Okay? So that's a good one for tomorrow. FLR, the Floor Corporation. So let's look at FLR. FLR is another interesting one. She starts out last year at 44.36. Makes a quick jump within a month to 55, which is a 25% increase within 30 days. She goes through a sideways trend and settles around 50s, right around election time again. Let's take a quick look at that. Okay. All right. November 3rd, she's at 51.56. Okay, November 4th, she drops down to 44. What's that all about? You get the election coming up. She's at 51.75. Okay? All right, it opened up 51.60. The high was 52.10. Okay? And it closed at 51.79. The next day, she opens at 44.18. It's a huge drop from 55 to 44. That's 25% drop for one day. How do you substantiate that? What's your reasoning? Okay, so the 4th, on November 4th, she's at 44.30. She goes sideways for 3 days. The election, Donald Trump gets elected on the 8th. She's at 44.49. She closed at 44.58. Okay, closed at 44.58. Next day, she opens at 46 and hits a high of 51. Okay, so now she's back up in that trading range again. Okay, she goes from 55 to 44, then back up to 51. All right, 51 and 44. Okay. She's back up to 51. Okay, Donald Trump's in the office over the next month. This thing hits a high of 57.78. From there, you got profit taken, going sideways to end up where she is today at 57.11. Can she hit that 21 cents? I don't know. What was her high for the year? No. The high for the year is only 57.78. She's at 57.35 right now. Does she have the room to do it? I don't know. You add 21 to the 35, and you're at 57.56, which is 1 cent below the high of the year. Now, this may be a great company, don't get me wrong, okay? But I'm not going to put my money on something that's so close, especially when you have other ones to pick from. There's so many to choose from. Do you really want to take the chance of getting into a company, no matter how good they are, if you're looking to make another high? I don't want to go into new territory. I want them to, to blaze, stay on the trail that they've already blazed. If they've already hit that, fine, let's stay with them. But that's awfully close to the high, so I wouldn't do that personally. You can do it if you want, but that's totally up to you. All right, Goldman Sachs. Let's take a look at them. Took a huge bailout. I don't even know if they deserve my consideration, but I don't play favorites. I'm strictly a numbers person. I can tell you just by looking at this, I probably won't do it. Several reasons. Number one, I don't really like stocks over $100 because long way to be wrong. She starts out the year last year at 148. She's at 249 right now. So that's like a 70% increase in a year. Okay, why? Okay, so let's go take a look at it. So she begins the year at 148. Nice steady upward trend for the couple of months. She peaks out in the summertime right at 165, goes sideways right up until the election. Let's isolate onto the election. Goldman Sachs, here you are. Donald Trump's threatening to come in. November 7th, it's at 179. Okay? The election's 108. What happens? She closes at 181.92. A month later, she's at 225. How do you substantiate that? From 181 to 225? That's like a $40 increase within a month. Why? She settles into a range a couple days later, right in the middle of December, 241, goes sideways for a month. Now you're into January. A little bit of profit taken there, going sideways a little bit. And she starts out in February at 228. Now we're at 249. This is the reason why I do not want to get into Goldman Sachs. They're paying 85-cent dividend. 65-cent dividend. Big deal. It's a $248 stock. That's a very small return. And besides, Goldman Sachs, they took a huge a huge amount of money from the government to fix the mess that they got us in. So I would say do your research, do your homework. You decide whether or not Goldman Sachs is for you. It's not for me. I don't like, $250 stock, especially when it was 140 at the beginning of last year, with a $100 increase in 1 year. I don't see it. Sorry. And is it going to make another high? Okay, right now it's at a high. Could it go higher? Yes, it could. But do you want to chance it with your money? I don't want to chance it with mine. So I'm just saying, you do your own homework, figure out what you want to do. Let's get out of that. And no question. So let's go to the next one. Jack Henry and Associates. I don't even know what Jack Henry does, but he's offering 31 cents. So let's take a look at what Jack Henry does. JKHY. Let's take a look. Okay, Jack Henry started last year off at 80 bucks. 80.48 at the beginning of last year. She jumps up to 84, goes sideways all the way into July, and peaks up around 89, and then from the beginning of August all the way to right around election time. Why am I laughing? Someone lost that money from 89 to 79. That's it's a $10 move down. So she drops 10 bucks. And here we are at election time. You're going to see this a lot. Pivotal point. 2008, 2009, when everything dropped. That's a pivot point. The next pivot point, the election of 2016. Crazy. All right. So November 7th, 2016, she's at 79.79. A month later, she's at 89.90. Again, a $10 move. Why? Why is there a $10 move in 10 days? Just because we have it, not 10 days, sorry. Why is there a $10 move in a month? Okay? All right, so $10 move within a month. She settled at 89.90. And from the end of the middle of December right to where we are now, she settled at 91. Okay, so let's quickly go back and see. We're going to say no to these guys, and you know why we're going to say no to these guys. Number one, I don't know what John Henry does. Sorry, still trying to get rid of this cold. Hold on a second. All right, give me another cough drop. I've been taking these things like they're free. All right, trying to suppress the cough. All right, I'm saying no to Jack Henry. Whew, these came. Let's go one more time. Yeah, Jack Henry and Associates. All right, they started off the year, like I said, 80 bucks. All right, now they're at 91. They're actually very close to the high, because the high for the year was 91.78. Okay, so she's at 91 now. Can it hit 91.78? Yeah, it could. It could reach the high again. But like I say, it's too close to the high. And do I really want to do that? I don't know. Could this be the new trading range? It could very well be. But I would have to see how it performed with the other software. So if you go join the membership and go to the other software and take a look at it and find out how it reacted to the dividend coming into the dividend play. So Jack Henry and Associates could actually have a very good high rating. So get in, get out, get you 31 cents and be done with. So I really can't say whether or not to do this one or not, because there is room between where it is now and the high of the year. Okay, so it's going to really play on what the software says. All right, the Mosaic Company. We're only looking at 20 cents. Now let's see what the Mosaic has done. MOS. Enter that. Okay, Mosaic started the year at 22 bucks. Okay, so the second week of February last year, 22 bucks, immediately jumps up to 30. So that's like, I don't know, 30? About a 33% move within a month. And then she goes sideways for a while, right up until the end of August. Drops down to 22.96 in October. And then from October, a nice steady climb all the way to where she is now at $34. And I'm going to have to excuse myself again. My goodness. Winter in New England. Catch a cold, catch a flu, catch all that kind of nice, neat stuff. All right. All right, so yesterday, the 13th, she made the high of the year. 34.36. And right now she's at 34.02. So I'm not looking to reach new highs, so I am going to pass on this one. But then again, before I say no to Mosaic, look at the charts, look at the software, put it through the ringer, see what it all says. If you've been watching these videos for a while, you see the software I use, and you see how I decipher which is a good one and which is a bad one. I got 2 pieces of software I did myself. I have the charts from 10-year charts from Yahoo Finance, and then I pick it apart. Did it hit? Is it going to hit another high this year? I don't know. It's at the high of the year was 34.46, and right now she's at 34.02. There's room for that 20 cents. You know, it's only looking for a 20 cent move. So Maxim, let's look at Maxim. Maxim Integrated Products. They're looking for 33 cents. MXIM. And there we go. Another one. Why is everybody at a high this time of year? Wow. These charts are beginning to all look the same. It's getting a little frustrating. Okay, so 32.42 at the second week of February last year. A nice little 2 months to hit 36. Goes sideways for a while. Back up again. Hits another high at 41. Goes sideways all the way up until January, where she hits a January 4th, she's at 39.88, and she jumps up to where she is now at 44.63, where she is today. So 44.63 is where she is. Our new target would be 44.99. Wait a minute, is that right? No, 44.96. Could it hit it? Sure, it could. So this one could be a possibility. She's in a little trading range since the end of January 27th. To where she is today, it's like going sideways. So she could continue to go sideways for the next week and a half or next 2 weeks and hit that 33 cents. Who knows? But like I said, take a look at the software, plug in the numbers, plug in the symbols, and see what they say. We got 3 more to look at. We got a little bit more time. So news, New Star Financial, see what they look like. NEWS. I'm hoping by next week or the middle of the week this will be gone. All right. So news starts out the year at 6.38. They're doing a 2-cent dividend. You know what? Let's pass this one by. I'm not chasing 2 cents. Let's go to Teva. Teva Pharmaceutical Industries paying out 34-cent dividend. Teva, T-E-V-A. Wow. This is the first one I've seen of these in a long time. Teva starts out the year last year at 56.55. Goes sideways for a month. A little bit of profit taken, sideways, profit taken, sideways, uptick, profit taken, uptick, sideways, and she slowly sinks all the way down, 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 down to where she is today. A pharmaceutical company that's not raking you over the coals. Oh my goodness. So from the beginning of the year to where we are now, she's been going sideways since the middle of January. And she's at today, the 14th, at 34.90. So can she hit that 34 cents? Yes, she can. I mean, it's easy. It's territory she's already been in. But again, go into the other software, plug it in, see what it looks like. This chart does not look happy at all. But I really don't care what the chart looks like. I want to see what historical performance, because people get in just before the dividend. They rise the price up just before the dividend. Once the dividend comes in, it drops back down and continues on where it's going. Where this company is for its dividend payments, I don't know. I would like to see on the charts and see what it says before I decide definitely no. But as you can see, going sideways, drops down, and she's been going sideways again. The third week in January, once she hit that bottom, she should be going sideways since. So that could be the low. You never know. Is this company worth more than $32 a share? So why, back in September of last year, did this thing start sinking? So it's been going sideways, a slight down until September of last year. Then from September last year, it really started sinking. So she may be at the bottom now, but you just don't know without doing a little bit more research. So that one, Tiva actually requires a little bit more research before you can get a good, strong answer out of that one way or the other. Last one we're going to look at, WTS, is Watts Water Technology, paying 18 cents. Let's take a look at what Watts has to offer for us today. WTS, put that in there. Okay. WTS. Okay, WTS doesn't look that bad. She starts out last year, second week of February at 51.65. A nice steady, I like seeing steady upstream like this with profit taking, continuing up, profit taking sideways, profit taking, going sideways. Ooh, definite profit taking up trick. Ooh, big drop right down here. Why is it drop there? Who knows? Who cares? So we're into the beginning of November. What happens? And look at this. Imagine that, right? In the 8th, 7th, 8th, there it is, the 8th. Donald Trump gets elected, so she goes from 62 and jumps on up to 68. So $6 to 10% increase just because we got a new president. Goes sideways, makes a high of 70.78, drops down to back to realistic prices where we are now, around 62, paying 18 cents. Does it look good? Yeah, it looks good. It's a utility. It's a water company. I'm assuming it's a water company because it says wait a minute, Watts Water Technologies. The name alone gives you an idea that it's a water company, so it's a utility. You want to find out more details about it? Go to Yahoo Finance, go to Google Finance, go to somewhere, do the research on WTS, find out what they're doing. But from what the chart says, and we're 10 days before the EX date, the software is going to give you a better idea. Plug the WTS into the software, see what the software says, see what it has done for the past 10 years. That should give you a good indicator of what it might do over the next 10 days. Because in the next 10 days, she's paying the dividend 18 cents. Not a lot of money, but hey, get in, get out, a couple thousand shares, that's a couple $100. And it's safe money too. You're in a water company. How can you go wrong, really? Everybody needs water. Well, this is James from the 10-Minute Trader. We're going to be plugging out today. And hopefully the next time I'm back with you, I'll get rid of this cough. That would be great. Well, at least I think it would be great. And I don't have very many questions today, but I do have some emails I want to share with you next time. I got some emails from some of our subscribers telling me how well they have progressed. And I'm going to share some of those stories with you next this Thursday coming up when we actually get into the options. The options are going crazy. It's just I'm a little upset about it, but I should have no reason to be upset. But it's throwing off all my numbers. It took me 12 months to hit 54% last year, and I'm already at 26%, which is halfway there in week number 7. Come Friday will be week number 7, and I'm already 50% of what I did last year. So my numbers for this year are not going to be very realistic because we have a new president. The president got in, everything went crazy, everything goes up, and everybody makes money, and then it throws off my percentages. So if you're looking for a realistic number, I can't give it to you this year. Last year I can give it to you because it was a realistic number because it was a regular year. Things are up, things are down, things are up, things are down. This year everything is up. I can't make a bad mistake. I can't make a bad decision this year. I think I have one loss this year so far, and that's it. And I'm in week number 7. Anyway, this is James signing out from the 10